Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Hope everyone is doing well. We are taking a look at the post non-farm payroll environment. All right, what happened? So there's probably two really important things to discuss about non-farm payroll. We just had a session in the Sector Secrets Mastery where we will look at futures contracts, so some futures day trading, mini, micro, setups with the NFP. So if we think about the previous 9 months, for the most part, anticipating the Federal Reserve's rate cuts meant we were in this kind of odd, good news is bearish, bad news is bullish, or disappointing news is bullish environment. But once the Federal Reserve starts cutting, which they did, right? The bazooka, 50 basis point cut, September 18, once that happens, now we actually need good news to be good. and also the type of data, the type of news that we're looking at is a little bit different. We will always be looking at employment because it's the second mandate that the Federal Reserve has. Obviously, number one was inflation. So we can presume that with the rate cuts, they pretty much think inflation and the trajectory of it is what they want, right? And they're not going to make themselves look bad. So let's just presume they're on their way. But the other part of it is, do people have jobs? Let's just boil it down to the basics. Do people have jobs and are they spending money? That's what we're focused on now. So you'll notice non-farm jolts primarily will be major economic events. Important, but not necessarily needle moving, will be things like initial claims and say the Challenger Gray Christmas jobs numbers. Those are going to, and ADP had kind of mixed down in there as well. But the main two economic events around jobs are going to be NFP and JOLTS. So we got NFP obviously today. After that, keep an eye on things like retail sales, new home sales, pending home sales. Is the consumer spending money? So are they employed? And are they spending money? And that's really where the data is going to be most impactful. So what we found out this morning, yes, indeed, more jobs than expected. Even the previous month was revised higher. And the average hourly earnings was higher than expected at 0.4. The previous number was revised higher from 0.4 to 0.5, which means maybe come the first Friday of November, we could see again some revisions here and the unemployment rate ticked down. There's nothing negative, bad about this. So we're in a good news is bullish environment. And when you take a look at the 5-minute chart here on the left side of the screen, you'll see absolutely good news is good news. We were setting up buys in front of this event. So if you're wondering, Rag, what were you setting up for? Long positions. Why? Because the Dow and the Russell were the most bullish. All four of them were above the previous session close. And then it's just a matter of, do we get our trigger? But for the most part, we started off looking in the bullish direction. And that's probably the most important part of the overall approach. Do we have things that are already acting in a bullish way and we want to see continuation? And that's the morning. As we go through the morning, I'm going to continue to look for potentially long positions. I'd love to see a pullback to the hourly price movement range. We can get either long the futures contracts, long calls in the futures contracts. So this doesn't mean it has to be futures after 9:30. We can focus on things like QQQ, SPY, IWM, etc., DIA. We can do that going forward. All right. So with that being said, let's go ahead and take a look at all those indices that I just mentioned. All are above the previous session close. NASDAQ's trading above the highs from, you can see here, Wednesday and Thursday. This is not a time to be bearish, gang. Unless you hate your money, this is not a time to overall be bearish. Meaning, what's the general gist of the movement? And the general gist of the movement continues to be to the upside. All right. Now, what's going with it? Well, that's where we'll take a look under the hood and say, hey, what individual sectors and even what other commodities continue to move higher? I would love for gold to give us a long position trigger today. If it gets down to about 26.45, 26.46, it's definitely on the radar as something I want to do. We will continue to watch things like GDX and Newmont Mining. But if the NFP has finally given bulls a permission to sort of come off the sidelines and start pushing to higher highs, then that would be follow through. That would be continuation. And that's what's going to help us continue to grow accounts into October. If you haven't checked it out already, and I'm sure most of you know that we have a class coming up, you can check out the replay of what we've been doing to grow accounts in choppy environments like August and September, and what kind of results and what kind of trades we were putting on. You can check that out at simplertrading.com/reliable replay. So simplertrading.com/reliable replay. All right. So with that being said, let's go ahead and tackle our questions. Good morning to YouTube, my YouTube channel, the Simpler Trading YouTube channel, as well as our Simpler Essentials room. All right. How does Exxon look for a long-term swing? All right, so let's take a look. Before I get to Exxon, I'm going to go up the food chain. And that means I'm going to look at crude oil, and I'm going to look at XLE, and then we'll get to Exxon. So is crude oil finally starting to break out? Well, crude's been bearish for most of summer. And then yesterday, I would say that was largely a geopolitical rally. So whenever there's any kind of issue in the Middle East, obviously we'll usually get a surge in crude. So be careful. It's still trading below 78, which is a very important number because that's right about where the, as I like to call it, the equator is waiting. So we're still in the bullish hemisphere of crude, but we are starting to move with some bullish candles. I just would have preferred this be a demand narrative, not a lack of supply narrative. I would have rather this been more of an OPEC messaging rather than a geopolitical move higher. But sometimes that's the catalyst, and we'll see what happens. I think it's still a little too soon to say whether or not crude oil is really ready to get above 78 and stay there. Well, if crude's moving higher, energy stocks within the XLE should be. Now, XLE looks a little bit better in that specifically it's above the equator, these white dots. And we've got the green candles. Now, is it going to be moving higher for some of the same geopolitical reasons? Sure. But I like the fact that Exxon hasn't been as bearish as crude. XLE has not been as bearish as crude oil. So then we get to Exxon. Exxon is absolutely the best looking stock in this group. It's going to have to work harder if crude oil starts moving lower and if XLE, the energy ETF, starts moving lower. But if we're looking for a relative outperformer, I absolutely like this name. Anything where we have a green candle sinking into the gray zone where we have bullish momentum, that's really going to be what I'll be focused on here. So yes, we can see there was a trigger on the second, got very close in the third. We'll see what today brings. But if that thing can trade down into the volatility support zone of the daily price movement range, yeah, I'm your huckleberry. So that's definitely something to keep an eye on. Sure. And XLE, OIH, these are even XOP are probably going to have some nice movement to the upside. While we're talking about energy, let me make sure that I haven't neglected to mention the awesomeness that has been natural gas, whether that be NG futures or UNG. Keep an eye on some stocks within the FCG. All right. So just like there's the crude oil stocks in XLE, we have natty gas stocks in FCG. Take a look at that ETF. Take a look at the stocks within it. You might like what you find there because natty is absolutely bullish. So we'll keep this on the bullish watch list, and we'll look for those dips into the daily price movement range. All right, next up. All right, here's a link, by the way, for those of you that may not be aware. We've had a webinar on Wednesday, walk through some examples of SPX trading, walk through some examples of position sizing for various size accounts. How do you grow an account? How you grow an account that's say sub $10,000 and how you would grow an account that's over say $10,000 isn't that different. And in fact, how you grow an account below 25 is pretty much 25,000 is pretty much the same thing. It's an understanding of risk, it's an understanding of budget, and it's an understanding of what kind of symbols you should be focusing on to have, right, to have the kind of follow through that would grow an account. So, some of the things that I've been sharing in the webinar and in the rooms are things like what we did in August. This is the August P&L for my small account that I've been using for the class coming up. In fact, it's tomorrow. And this is September. So you can see they're moving higher. It doesn't mean that the NASDAQ and the S&P were moving higher, does it? It does mean that there are always going to be a handful of stocks that are going to benefit from inflows. And if we find those trends, those are going to be helping us grow accounts. So if you want to learn more about that, check out the webinar. The class is tomorrow. The tech session is today, and really stoked about that coming up. All right. Question here. Do I think a straddle would be a good trade on the SPY today? I do a very specific type of straddle. I look at what's known as a strip straddle or a strap straddle. And if you're going to put either one of those strategies on, you can do them in a cash account, which is what I recommend. A strap straddle, which is a bullish straddle, a 2-to-1 or even 3-to-1 ratio of calls to puts. If we get a pullback, right? If we get a pullback, I'm not one of those traders that wants to say we're going to exhaust and sell off. I don't want to take advantage of bearish momentum in a bullish environment unless it's maybe a day trade. So I won't know at 12 after 9, M. Clark. I won't know until the market's open and I get a setup, right? Could that be something to look at? Maybe, but ultimately, until we get a setup, there's nothing for me to do. It's akin to, for playing baseball, there's no reason for me to swing at anything until the pitcher throws something. So I'm going to be waiting for a pitch. Thanks for the question. All right, next up is Nvidia. What do we have going on in NVDA? I'll tell you again, I've been a little uninterested in semiconductors because if I'm taking a look at the 4 sectors within the NASDAQ, it's really much more an XLY, XLC, even IYZ environment where we have consumer discretionary, communications, telecommunications, moving in a better way than, say, semiconductors or even tech. Now, might Nvidia start to get out of its own way? Sure, that would be great. But once again, I need a preferably green colored candle to sink into that gray zone. What we've done, gang, is we've automated some really important things. Volatility, support and resistance, participation, and momentum and trend. And that's what the color coding does. The volatility are the gold and gray zones. The participation, the momentum, the trend are the candle colors themselves. Now, I don't mind to buy a yellow neutral candle like what we saw on the first. I don't mind to do that. It's not my preference. I would rather it be a green candle that's far more indicative of follow through to the upside. That being said, if we pull back, it might go yellow again. But if you can wait for a pullback, and that's the kind of trader that I am, I'd rather get long. Like, let's use a candle like this one right here, right? Exhaustion traders, there's your yellow and the gray. Exhaustion traders are going to look at this zone for the buy. That's what I do, right? Momentum traders will look at some sort of level as price is moving higher for the buy. This is the difference between exhaustion and momentum, right? Same thing. Exhaustion traders will take advantage of the bullishness at some point along the journey higher. Exhaustion traders are looking for a support level that, if reached, that would trigger the buy. Same thing here. Momentum, right? Exhaustion. And so that's where I'm going to always say I'm never going to be a buyer at a higher high. I'm always going to be focused on some sort of support level from which I would expect the sentiment and the momentum to change and the trend ideally to resume. And that's where I say I really want to focus on trends. Now, if I'm looking at tech stocks, there's a decent trend in Amazon. There's a trend that's forming now in Meta. So it's not a matter of whether or not there's something to do in Nvidia. I think the bigger question is, do I want to do anything in Nvidia? Is there a setup in Nvidia, or whatever that name may be, that's better than something else. So if I'm looking at Microsoft, not particularly interested in Microsoft. If I'm looking at Apple, not particularly interested in Apple, right? There are better names. So probably the first question all of us need to ask is, why are we looking at the stock that we're looking at? Does it have structure and follow through that's superior to other things that might be in trends? And that's probably the most difficult thing for traders to do, which is keep a fluid watch list that's full of relative outperformers, even if it's something that you didn't trade last week, even if it's something that you didn't trade yesterday. Is the watch list fluid? Are you focusing on the best versus focusing on what you're most familiar with? And getting out of that circle of comfort, that familiarity of, well, I trade Tesla or whatever it is, right, all the time, it may not be the best candidate for follow through. That's always going to be, our North Star, so to speak. All right. Question here. When I buy calls in SPY as a day trade, what day's expiration am I using for a day trade? As little as possible. And that's not just SPY. Obviously things like SPY, QQQ, IWM are going to give us those 0 days to options expiration. And that's what I'll use. But let's say I'm day trading a stock with a Friday expiration. Or let's say I'm trading an ETF with a Monday, Wednesday, Friday. Whatever has the least amount of time to expiration is what I'll focus on, because I won't pay for time I don't need. Am I in Coke? We don't hold, right? No, if once Coke reaches a threshold of risk that goes beyond the original trading plan, and the trading plan always includes what the position sizing is in terms of the process that we teach you, what the stop loss is, what the target is, and what the triggers are. No, we're long gone out of Coke, Jess. That reached the target. We take small, and this is a loss, by the way. I take small losses. Here, hang on. Let me show you all this. The recap. All right. I closed Coke. It was a difficult one in terms of not being a gradual move to close. But yeah, we're long gone. It gapped down. It stayed below the threshold, which is never max debit, right? We never use max debit. But once that percentage is exceeded, just cut it. That's okay. No harm, no foul. It's not personal. And we just move on to the next setup. And it's not going to be Coke again. This is a really big error that some traders make. Aside from adding, another thing that traders will do is once they get stopped out of a certain symbol, they want back into it again. They want their lunch money back. It's a revenge trade. So Coke's the last thing that we're looking at. Took a paper cut, moved on. And that leaves me more capital to focus on things that conceivably are going to continue to work, like Cisco and industrials. The month was really geared towards scaling out of, and this has happened very organically, scaling out of winners, whether that be gold, Newmont Mining, whether that be one of our XLY trades. We actually very naturally have found ourselves nearly flat as we get into this first Friday of the month, which I love, because that means we have an open book and a lot of free capital to work with through the remainder of the month. All right, next up is NEE. I do like utilities a lot, but it depends on where you buy it. All right, this is such a great example again of why I'm not a momentum trader, right? Momentum traders are doing what? If there's a support level and there's a resistance level, but let's presume there's also a trend happening, right? Okay, momentum traders will buy through the break of resistance. Exhaustion traders, which is what I am, will buy at a retest of support. All right, so now how do we define support? For me, and the way that I teach in the Sector Secrets Mastery, the way I'm going to teach you in the class tomorrow, is to use automated levels. So you're not having to use subjective levels where, some of our biases can get factored in. I'm going to look for pullbacks. And until I get a pullback, there's nothing to do. I won't be buying at higher highs. That's a very vulnerable position. Even in a trend, it's a very vulnerable position. So you might say, Rog, what if you bought on a day like this? This is still better. This is still better, right? This is still better. You're going to have a better risk reward. Now, you might say, Rog, it sounds like exhaustion trading is perfect. I think it pretty darn close is. However, if you have a runaway momentum market that doesn't pull back, you're not going to get a trigger. And I'm actually fine with that, because those are usually setups that No one sees coming. There's a lot of volatility. There's a lot of talk. There's a lot of attention, and it just takes off. But when it pulls back, look out. You better have a parachute, right? It's like a base jump. So that being said, I like things that are organized on the way up. XLU is a great example. So the same thing is going to apply to NEE, the number one weighted stock in XLU, which is I want to pull back, and at that point I'll get long. But I'll tell you this, I would not focus solely on NEE. The best way I have found to take advantage of a sector that has lots of uptrends within it is take a look at the tide, not the boats. Take a look at the sector, not necessarily the individual stock. You'll get a lot more bang for your buck. All right, gang. And just like that, I am out of time. I'll see you all tomorrow for the class. It's at 1 p.m. Eastern. Check it out. You can check out the replay of the webinar to learn more about what I'll be teaching you and why it's so important to do, regardless of your account size, but most especially if you have a smaller account that you're trying to grow or just generally struggling with account growth. simplertrading.com/reliable-replay. Check out what we're doing, and I'll see y'all tomorrow. Be good to each other.